Welcome to this video analyzing the Indian Rupee under global siege. We will examine the convergence of U.S. yields, dollar strength, and crude oil volatility affecting the INR. The Indian Rupee is facing unprecedented pressure, driven by a perfect storm of global macro factors and domestic energy vulnerabilities. Our focus areas include U.S. Treasury yield surges, dollar index dominance, and India's crude oil import dependency. The rupee has reached a new lifetime low of 95.95 per USD, declining for 3 straight sessions. This represents a 1.36% loss in value this week. Intervention by the RBI has moderated some of the downside. A primary driver of the dollar's strength is the U.S. 10-year Treasury yield climbing above 4.50%, a near one-year high. Investors anticipate further Federal Reserve interest rate hikes to combat oil-driven inflation. The dollar index has surpassed 99, triggering a broad sell-off in emerging market currencies, including Asian currencies. This environment is exacerbated by persistent equity outflows and high dollar demand from oil marketing companies. Brent crude prices are steady near $107 per barrel. For a major importer like India, sustained high crude prices translate directly into currency weakness. Markets remain volatile, awaiting updates on high-stakes geopolitical meetings. India's oil import dependency, at about 90%, makes the rupee highly sensitive to global commodity price fluctuations. This vulnerability is compounded by high dollar demand from oil marketing companies and widening trade deficit concerns. The weekly depreciation trend shows a cumulative loss of 1.36%. The US dollar has traded between a high of 95.95 and a low of 94.48 against the INR this week, reflecting significant intraday volatility. The rising import costs are impacting the domestic economy, leading to fuel price adjustments. State-run fuel retailers have initiated a major price hike of 3 rupees per liter for petrol and diesel, which will have a secondary impact on consumer inflation. The Reserve Bank of India has actively intervened in currency markets to manage the pace of decline and prevent volatility. Furthermore, the government is reportedly exploring measures to boost dollar inflows to strengthen liquidity. For the short-term outlook, the INR is expected to open in the 95.80 to 95.90 range. We are monitoring the U.S. 10-year yield and geopolitical developments influencing Brent crude direction. Possible policy shifts by the RBI could stabilize capital flows. Thank you for watching this video. We appreciate your time and engagement with this important economic briefing.